Good afternoon, traders, and welcome to the Hot Stocks Outlook for January 5th, 2017. So first trading week of the new year, very exciting time. And this is an absolutely great opportunity to really demonstrate the benefit of one, utilizing technology to really get yourself an edge in the markets, and two, really understanding, how important intermarket analysis is and how other markets affect and drive and influence the markets that you are trading. So we're looking here at the VantagePoint intermarket analysis software, and I have a few charts to go over, a couple of these sort of recapping from some previous videos, but I want to focus on this company here, Wabash National Corporation here. Now, against the price data here, and we have daily bars and candles really representing the price data over really since the beginning of November here. You see November 8th going all the way to the current day. And what we have against those daily bars and candles is actually a black line and a blue line. And so I really want to explain the difference between these lines and what's going into that calculation, because this is really where the technology and intermarket analysis is what's giving traders a huge advantage in these markets. Now, the black line that you guys see on the chart there, that is a simple moving average, a regular SMA simple moving average. So very easy indicator to calculate, because it only takes the last 10 close prices, adds those all together, and then divides by 10. And it's going to keep plotting that line moving forward through time. So it's a moving average. Now, the problem with that calculation is it's only based on past prices. So it's already occurred. So completely known information from the market. And it's only looking at one market at a time. So you can think of that as it's looking at the market in isolation, as if the dollar and gold and crude oil prices don't have an effect, when we know that they are having huge effects right now, which we're really going to see, in the markets and more in this demonstration here. But against that black line here, very simple calculation there with the simple moving average. Now, on top of that black line, though, you're going to see that there is a blue line, and this is what's very important to understand. Now, for that calculation, for that value to be plotted on the chart, VantagePoint is doing a very sophisticated type of analysis. It's actually utilizing neural networks, type of artificial intelligence, to analyze the 25 markets that are all known to affect, drive, and influence the underlying market, or the target market, in this case, Wabash. So, this is going to include things like, the US dollar, gold prices, other related stocks, ETFs, where a lot of the trading is taking place nowadays. So this is very important information to incorporate into your overall analysis. And so what we're essentially looking at here with this blue and the black line is, we have a comparison between an actual moving average, really a summary of what's already occurred in a given market, and that blue line being a prediction of where prices are expected to go next. But again, weighing in, how are these other markets affecting and influencing this target market? And the end result is a much more accurate and robust forecasting tool. And so traders simply need to look for these opportunities where, this blue line crosses above the black line. So that's representing that, hey, there's been a trend reversal in the market. And those are really the best times to identify new trading opportunities, because now if a predicted moving average is crossed above the actual, that's saying that, look, there's been a underlying change in this market, and you should look to go ahead and exploit that opportunity. Now, a very important thing that, we want to focus on as we move through some of these charts, though, is the separation between that blue and the black line. If the prediction is well above the actual moving average, that's signaling a lot of strength for traders, whereas if it's very narrow and close together, that's not as strong of a trend. So very important information. And this is how traders are getting a huge edge in the markets, really improving their timing by getting into the markets early before a lot of that volatility picks up and leaves a lot of traders behind. Now, below all the price action there in that predicted moving average, you also notice that we have this indicator called the predicted neural index. And this is really where you really understand the complete forecast here. This indicator can only be a 1 or a 0, yes or no, right or wrong, what we really call really binary output. And what it's able to do is anticipate short-term strength or weakness over the next 48 hours. So 48 hours, 2 trading days, because we're looking at daily bars and candles here, but very short term strength or weakness in the market. And it's really the pairing of these indicators that gives traders that forecast and really help them make those better trading decisions regardless of your trading style. Because if you're a short-term trader, you need to know, hey, over these 48-hour periods, when do I want to be long? When do I want to be cautious? And then what is the overall direction of the market? Should I be getting long? Should I be getting short? Should I be trying to, move stops, hit profit targets, things like this? So we see that, over the course of this trade here, since that crossover came through, this market has moved up tremendously, about a 44% move in 38 trading days. And you see how the market, never really moves against you. And that blue line continually saying, look, this market is expected to go higher, remain in that position. And you see $5 a share on a, $11.50 stock moving up to $16.50 here. So huge opportunity to make a lot of money, even on just, a few hundred shares, making, a few $1,000s there. So let's go ahead and move on and look at some more of these opportunities, knowing this information and how to interpret these forecasts. And there's actually some markets here that I want to review for some, from some previous videos, so you can really understand how this can really help you really day in and day out with that decision-making process in the market. Now, what everyone's hearing about in the markets right now are these big box retailers doing very, very poorly. Macy's and Kohl's and all these sorts of things. But look at the forecast here for Bed Bath & Beyond. We looked at Best Buy last week. We're going to look at Macy's here. Really few weeks ago. I mean, all the way back here, let's see what the date is here. But all the way back on the 16th of December. So 16th of December, we get a crossover to the downside there in Bed Bath & Beyond, similar to Best Buy that we looked at there, very similar stocks here. But you see that Neural Index down there at a 0 saying this stock is weak. Look to go ahead and set your short positions. And you see all these markets doing very, very poorly still. So trading much lower. But I want to take a really close look at this with you guys. So markets moved down about 14%. Beautiful move. But what you're going to notice here is look how accurate the overall forecast is. You see your Neural Index gets up to a 1 here saying, look, strength over the next 48 hours. But look at the trend here. Huge amount of separation between that blue and the black line saying, look, from this point on, look to short at a higher price. Expect that retracement, that move higher. But the trend is down. And so that's what's allowed, traders to capture this 14% as the market moves lower, but also understand that, from this day moving forward, there's going to be a better price to short at a higher price and then ride that continuation of that trend there. We're hearing right now in the news and all this stuff today, really after the fact here, of Macy's and all these stores doing really poorly over the holidays. Well, we had a crossover all the way back at the beginning of December saying, look, you do not want to be long Macy's. Now's the time to go ahead and set those short positions, day traded over the short-term lower. And you see just how effective the forecast here. Now, this stock's down another, 15, 14% today. But what I want to focus on is the accuracy of the forecast, where the market is forecasted to start trending lower. You see the Neural Index here, we get a little bit of a bounce higher, but blue line's still below the black line saying, look, you want to remain short. No reason on earth to be long. And look at this huge amount of separation between that predicted moving average saying, look, there's the opportunity, remain short by put options, whatever you want to do. Make sure that your trading decisions are in line with something that's robust and accurate and accounting for what's going on out there in the ETFs, and the dollar index is huge right now for stocks, crude oil. Very important to have a tool that can summarize all that information and give you really an accurate forecast to make your daily trading decisions day in and day out. Are you buying, selling, adjusting your stops based on your strategy? So let's move on to CarMax. I know we covered this really over the last video, and a lot of liquidity drops out of the market over that New Year holiday. But what we really mentioned was that this market was still in an uptrend, and we actually had some weakness here as far as the short-term forecasting, saying, look, try to get better prices. The trend is still up, but expect some weakness over the next couple of days. Well, this has been obviously a great opportunity. We had a great move yesterday to go even higher, but you see that just over the short term here, looking at more closely at the Neural Index here. So, recently, if you're a shorter term trader, Neural Index pops up there a 1 saying, look, you don't want to be day trading over these days where the market is weak, right? So when that Neural Index says, look, now there's strength back in the market again, the trend is still up, blue line over black line, and go ahead, start trading that market long there. And you see, over a couple dollars a share, almost $3 a share from 64 up to 67 in just 2 trading days. And you see, that's really the benefit of knowing that, hey, there's strength in this market, the trend you can go in and make an intelligent trading decision based off of that information. So last but not least here, another recap here, Silver Standard Resources. We talked about this last week because of this crossover here. And I wanted to, really demonstrate, we can scan these markets, identify really these big market turns taking place in individual stocks and sectors related to, again, things like the gold market or crude oil or highly affected by commodity and ETF groups and things like this. Well, here was a crossover and the market was at about 940, I think, when I mentioned it last week, and now it's up above, $10 per share. But traders really need to understand that, there's been great trends in this market over the past, 2 or 3 months to go ahead, trail your stops like, CarMax, Wabash, great examples of ways to get into the market and trail those stops. But you want to go ahead and find those new opportunities. So we got about, 20% or so here. But really great ways to hedge, maybe your shorts that you have on, things like Macy's or Bed Bath & Beyond, some of those other shorts you have in the market. Find those places where those probabilities are in your favor and go ahead and take those trades. So, really nice opportunity here. I don't know where we're at. It was like 1030, 1040 earlier. So, this was an $8 stock once that crossover came through. So tremendous trading opportunities for traders to make a lot of money starting fresh right here in the new year. So, as always, guys, I hope this has been helpful. This has been the Hot Stocks Outlook for January 5th, 2017. Got to get used to saying that. But best of luck out there in the markets. Good luck, and thanks for watching, and bye for now.